Okay, guys, good morning to all of you once again. All right, this is Cal here yourself. Good morning to you, Anthony. Good morning to you, Alex. Good morning to you, Janet. Right, good morning to all of you. All right, thank you for waiting for me. I need to get some medical stuff for my family members, so that's also was a bit late. Thank you for waiting for me. Now, today's MAO will be very good, very important, and of course, the hint I gave yesterday was pretty outright. Not too sure how many of you caught the hint, but yesterday the hint was pretty simple. I was expecting the market to go higher, but I did say that, right, if the market pulls back, it will have to hit certain technical point. And then after that itself, the recovery will be there. That's why when I give the 5 counters, the 4, 5, 6 counter US stocks, right, you notice that all my drawings show the initial drop first, then the buyout, right? The initial drop first, then the buyout. I was pretty specific with the drawing. So later on and stuff, right, we do a quick overview of some of them. But once again, good morning to all of you. And of course, for today, to start off with, and as what people have been asking me, Cal, can you just give your view of the day so that we can skip this whole MAO? Well, my view of the day today is very simple. I'm bullish. Yes, you heard me correct. Today, I am bullish. Now, why am I bullish? Because I don't think Federal Reserve Jerome Powell will stun the market today. I don't think so. Now, of course, again, he can do that, but I mean, watching him for the last few years and the way he reacts, the way he do things, I don't think so he will stun the market. But of course, if you buy in advance and you very bought in a good price, so you just have to do SWL, show in level, and then let it run. Because the thing is this, everybody now is looking at March itself to have a rate hike. But I don't think he will do that. So if let's say today he slipped in some hints and say that there will be no rate hike in March at least, maybe later, then of course the market will rally big time. Yeah. So that's the reason why am I thinking that today it will be much more dangerous for you to short the market. Yeah. So just a little my personal sharing. Okay. So with that itself, right? Let's just look at today's market, today's MAO. Let's start now. Okay, so today, 11th of January, 2022, today Tuesday, so there will be Super Tuesday. Now today we do an overview of how to utilize the day-to-day trading. Okay, so we'll look at it later on at 3 p.m. Singapore time. Now why the time slot vary? Because I have to take care of my kiddos, so that's why I cannot really put myself in a position to give you a specific timing. Yeah, sorry for that. Now, you can see from the back for today's picture, it's very clear there are 2 key persons. One is Jamie Dimon. Obviously, this is a guy from JP Morgan. He is very bullish. In fact, he's so bullish that he feels that, right, if you don't buy, you must be, doesn't belong to this world. Okay? All right, morning to you, Ching Hui. Morning to you, Edwin, Joe. Okay, morning to you guys. So JP Dimon is very bullish. Then, of course, Jerome Powell will be the main person today. Everybody watching what he says. And, of course, on Thursday, his second in command will be definitely also be watched. Yeah. Okay. So that is why these 2 gentlemen's face are taking majority of my background collage. Now disclaimer. Okay. Sorry, I'm back. So the market really rebounded after the big sell-off. So the sell-off came in first as we expected. Now when market is selling itself as a trader, you should be looking to buy, right? That's how it works. So yesterday when I gave specific levels, I say that once the market hit a technical point, you have to look out for buying. And truth be told, it really happened. So disclaimer apply as usual. My job is to give you the market calls. Your job is to do your risk assessment and trade according to rules. Yeah. Now I like this joke because why? Yeah, trying to tame it was a dumb process. Now this is a lion, aka a market. So this obviously where is the lion tamer in the belly of the market? Okay, a bit dark joke here itself, but in short itself, right, what the bull and the bear are trying to discuss is that, right, trying to tame the market is always a wrong thing to do, because the market will eat you up faster than you can think of. Truth be told. Now, yesterday itself, right, even though I already tell you that the Nasdaq was a buy initially, but I did mention that if the Nasdaq break OP, you must be very careful. And I even give a specific figure. I say that this 15,337 could be a level to watch out for the Nasdaq. And of course, the Nasdaq came down, hit that point, and even went lower. But after that itself, right, that was where the market hits a technical point, and that's where it rebound. So even though I was right in the process of where it will go, but the market can swing us first very heavily before it moves. So that's the reason why you have to pay attention to what I shared during the MAO. Yeah. So before we go on first, remember that we already have updated you guys the preview replay on the Trade with the Boys Facebook page. Now, if you have friends who want to join the TWB Basic Workshop, it's coming Saturday. All right, please contact this Richard, because he will be the right person to contact, and he will tell the person, your friends, and what is going to be shared during the Saturday itself. Okay, so this is a very good time to remember this. This is a great time to turn danger into opportunity, because don't you realize that every time there's a danger, we are there to take advantage of this. And then when the danger turns to opportunity, we are also there again to make money from it. So that's how a good trader should be doing for 2022. All right, because we have very good stuff. So do watch it. If you haven't watched the preview content, do watch it. It's a 1 hour session only. So the content are pretty good. Yeah. Now, of course, oops, this one is 01. Yeah. Okay, so yesterday at about 9 p.m. around 9 p.m. Singapore time, I basically wrote there, I said that Nasdaq to see chocolate bar at 15,337. Then after that itself, right, when the Nasdaq came down all the way and hit that point itself, okay, I did say that time to buy back some profit. Now, I think by now you all probably can get the hang of this. Whenever I put a posting of some of the results, that got double meaning. One is just show you that people are making money. That's first meaning, obviously. The second meaning is to tell you that, hey, why the person is buying back or selling. That means that likely this could be a technical point the market may turn. But inform is still right. By 12:15 a.m., all right, even at 12:15 a.m., I'm actually around. I actually came in and wrote there the market rebounded from the low, and that is a very good reminder that you should be covering back a position. I even actually went to the Trade with the Boys. I even put out there, one can book all shorts now at 35,700. The market may bounce up on oversold reason, all right? So I gave it very clear with my view, and I tell you why is that so, because of the BMB extension minus 1x1 given and stuff like that. So of course, what I gather from there is, you can take a look, everybody. Okay, you can take a look. Now, yesterday I told you, right, Microsoft, now it closed at 3. This Microsoft closed at about, Microsoft closed about 3:12 on Monday. Started Friday, and I said that Microsoft will have a support at 310, and Microsoft shares will go up to 322. So I gave a very clear figure itself over there, and what happened? Let's take a look. You can see Microsoft share really came down, not only 310, even to 305, but after that itself, right, it rebounded very nicely, and now it's back up to 314. Okay, so basically on 314 dropped down to 305, but 305 back to 314. Okay, so that means that pretty spot on, right? So my Microsoft was spot on. Yeah, do me a favor, just give me actually all 5 of them was spot on, but I will pick 2. Okay, so do me a favor, keep the word Microsoft spot on if you can. Do me a favor, thank you very much. Now, of course, the next one obviously itself is the scary one. My friend called me and said, Kel, how the hell you did it? Now, you see, this was Goldman Sachs. Now, Goldman Sachs was trading at $172 on the Monday's closing, yeah? On Friday's closing. Okay, Tuesday closing, it was, just get my stuff. Okay, it was at this, it was at 172 area. I said that Goldman Sachs has to come down, Apple has to come down to 168. I said that Apple had to come down to 168, then it will rebound to 177. So I gave 2 numbers. I told you come down to 168 first, and then after that it will go back up to 177, right? So the figure 168. So the scary part is this. Look at it. Oh my goodness. The market really, this Apple came down to 168. Oh my God. And at 168 itself, it rebounded and closed at 172. So it's just $5 away from my target. So all these things shows the importance of understand how to use the technical analysis to get the thing correct. Yeah, so this is very scary. My friend was like, I mean, how do you know that Apple will start at 168? My goodness. I said that if I tell you it's a guess, what do you think? Okay. So this is not the first time I'm doing this. All I used was actually a very simple system. I called use a chocolate bar or KCB. So as long as you know how to use KCB or chocolate bar, you can roughly know where will be the technical point as a trader. So hopefully you guys have understand this. And of course, for those who have made money yesterday, congratulations to you, because I know some of y'all made money and y'all actually text me and thank me for that. So, you know, all these things basically it warms my heart, because end of the day, if you actually make money, that's the best way to thank me, because at least my 1 hour plus session itself is not wasted, and my 5 hours prior to this, all my preparation work itself is not wasted. Yeah. So thank you very much again on this. Thank you, Chong Ming. Thank you, Cheng Kui. Thank you, Joe. Thank you, Alex. Okay, Susan. Yeah, thank you very much. Okay, so tonight we have Federal Chairman Jerome Powell testifying. Now he will testify and says that about how he view in the current situation. Most likely, in my opinion, he will not stun the market, as I said earlier. Now on Wednesday, it's a CPI data, and we are looking at the market forecast to be the same and last one. So I kind of believe that it could be the same, yeah, because nothing much have seriously went up the last time. Then Thursday we had the initial jobless claim, yeah. So I wouldn't go to that detail, but just to inform you that, but nonetheless, the core CPI data since September last year has been climbing. So obviously this is not a good thing itself, yeah. Now the Dow Jones itself was incredible. The Dow Jones was down like, wow, it was down by from 36,200, it dropped all the way to 35,600. So that means at one stage, the Dow was down almost 600 points. That was a lot. Then after that itself, it recovers all the way to close near the high of the momentum, down 162 points. So it was down by almost 600 before it recovered to down by 162. So this is actually pretty good. Yeah, pretty good. So likely later on, about 1 to 2 p.m., the European market itself when open, there should be another upthrust towards it, because the European did not see the upthrust towards the end. They saw the front part, they did not see the back part. Yeah. So the Nasdaq rallies on Monday afternoon to snap losing streak, erasing loss of 2%. Now the Nasdaq was down at 2%, as much as 2%, but basically in the afternoon it rallied. Yeah? So the thing is this, it was Nvidia, Tesla, Apple that basically closed higher. That's those counters that I mentioned to you. Now, of course, the 10-year yield briefly touched 1.8%. That was a beauty, because I said that it will go to 1.8%. So let's take a look right now. You can see that on the chart, it basically touches my beautiful 1.8% and pull back very nicely. So again, this tells you why certain numbers itself, you cannot play punk with it, because this number, not only from an American number, but when I put a chart in itself, right, you can see from the Fibonacci, it does shows us that Y itself, that the one, yeah. Can you see now? The market 1.8% was to the highest point, the lowest point, and 1.8% happened to be around the 50% mark itself. So this speaks volume of why 1.8% is so important. And of course, the Nasdaq was down as much as 9% at one stage. So that was what happened. But the JP Morgan CEO, Jamie Dimon, is pretty optimistic, and he feel that this is going to be the best growth ever for this year. So good, yeah. And basically, right, Jerome Powell, I was speaking later, CPI shortly the next day. All these things itself is important, but take note, the financial heavyweight like JP Morgan, Chase, Citibank, Wells Fargo will have the result Friday. I got this suspect that JP Morgan should have a better figure than expected. Yeah, that's why the CEO itself is so active recently. So let's review what happened yesterday for the Dow Jones. Now the Dow Jones was clear. It opened up itself in between the pivot one. It touches pivot but fail and come down, right? So when it came down itself, once it came down, it must lose the MA30 at 36,076. It lost it. And then after that, it went all the way to take down my BNB level, and that's 35,855. So when we were talking about this, the Dow Jones was at 36,000, and so we're aiming it will go down to the BNB minus 1 times 1, which really happened. It even go lower to 35,775. Remember, I said that it will go down to this figure, 35,775. Once it reaches there itself, it rebounded. That's interesting. And it just closed marginally above the MA30 for ourselves. Okay. Now, why there is strong recovery? If you want to make it as a form of evidence, because the KSI is green in color, so the buyers actually came in. Yeah. So that was what happened to the Dow on the day chart. Let's look at intraday chart. Now the intraday chart itself, the morning was pretty clear. It was all the way up. But once it crossed to hit the KTR +1, and then the pivot was there, you can see once the color change came in, CCYR, it will become a sell, because color change at pivot is most powerful. So CCYR came in, the gold came down first, hit KTR -1, ding dong, ding dong, ding dong. Then suddenly you see the blue bar here, right? That means that it has to go to the next level, and the market came down. Now, of course, when it hit the KTR -2 and pivot 2, it's supposed to stop there. But because once the market is below OP and pivot 2, we are reminded to sell further. And of course, what happened? The Dow actually came down by another almost 280 points because of that. So, yep. Okay, so that was what happened to yesterday's market for the Dow. Let's look at gold. Okay, gold is quite a bit of turbulence. Gold basically came down first, touched MLP 1793, low was 1790. But I did say if the gold finds strength at 1788 level, all right, to 1793, if you find strength after coming down, it will be a buy. And of course, I did say that there will be a lot of this interference. But again, once you can cross through it, you can see right now it crossed through it, right? It doesn't matter. So that was what happened. But the only thing is that the KSI remain red and blue bars are there. So this actually makes the whole the thing itself rather choppy. Okay, let's look at the intraday. Intraday, ding dong first. That's a very normal thing for gold in the morning. But you can see that the KSI turned green and it's a KSI jump. That means the buyers are coming in. And of course, there's no much blue bar after that. So straight away, when the market found strength, this is the BNB, right? BNB plus color change. Okay, and it triggered MLP. All three reasons. That's why the gold shoot up to KTR +1. But once it hit there itself, you see multiple green dots on the screen, right? That means that the market tells you that there could be a bigger movement coming soon. And before you can know it, the market is actually take a sell position instead. So traders, remember, whenever you see you are in the open, do make sure that you check out your surrounding. But more important thing is that, right, when you see all this little movement here, like the color change over BNB, then if you see many green dots already, be careful, it can swing down also, yeah? So take note of that. So very important for this. Okay, so what we have here itself is the recap of the Dow and gold. Let's look at the rest. Now, for some local and global news right now, Singapore cites 750 new cases and 389 are Omicron. Okay. And of course, US has changed our travel advisory for Singapore to high level because of COVID-19 from unknown. Okay. And of course, those who don't take their booster shot itself will be required by 14 February. Now that is in Singapore, but how about USA? Now USA in a single day went up by 132,000. And that one is Omicron cases. But the one day to day itself is 700,000 cases. Oh my God. Okay. So 700,000 cases, this is really incredible. And of course, the US CDC once again traveled to Canada already. Now, UK itself, right, the death toll has hit 150,000. And Britain have put private health firms on high alert, okay? And of course, scientists are still not able for UK to find out what's happening with that. So this is the COVID cases around the world. Now, Bitcoin yesterday dropped below 40,000, a level that I told you it will drop, and indeed it happened. So I did say that if you go down to 39,500 level, you consider to buy if you want to buy. And now it's trading a little bit higher. If I see it not wrongly, let's take a look. Wow, it's at 42,000 already Bitcoin. Okay, so Bitcoin, I said that it will come down to 40,000, and it really came down. The low of Bitcoin is the 39,558. Oh, I missed my 39,500 by just $58. Okay, doesn't matter. Now the volume is big. The volume is big. You can see the volume is big. So actually, this is actually a very good buy. Now take note, if the Bitcoin can cross 42,300, yeah. Now why do I say that? Because you can see that we have a very big movement over here, and of course this is the lowest point. So I take the high and the low on this as a gauge, yeah, as a gauge. So sorry for that. So in short, it's now Bitcoin is at 42,000. That is pretty good. Okay, because we call for buy at about 40,000, 39,500. Yeah, so we make some money. Okay, so with that itself, right, let's just look at the 5 crypto updates. Number 1, Mozilla Foundation criticized after saying that it would accept cryptocurrency for donation. So the first thing on hit, scammer last year alone stole $14 billion worth. Wow, $14 billion worth. That's so much better. Okay, all right, $14 billion. And of course, we have GameStop trying to launch our own NFT, and PayPal would like to launch its own stable coin. And of course, the CEO of Signal CEO, right, is going to what do you call, criticize a Web3 and about getting attention over weekend. Okay, now what's Web3 itself? You don't need to ask me, right? So take a look, Web3, yeah. A largely nebulous concept whereby Web3 is being trumpeted by crypto and blockchain expenses as the future of the market. The idea is to create a decentralized web whereby users can transport their data from service to service without corporate walls garden to stop them. So in short, it's not right. They're trying to bypass the tyrant internet. Yeah, that's the main thing is this. All right, so pretty light on the local and global news. Let's look at the important news. This one got quite a fair bit. So let's just go through it one by one, yeah? 1 minute. Okay, so the higher interest rate is going to upset stocks. Is it true or false? Well, it's all depending on how you view it, because some of the counters would love to have interest rate to be higher. So definitely they won't mind having interest rate higher, like example, the banks. Now, basically what happened is that some of them are looking at now there's an 80% chance that there will be a rate hike in March, which I totally disagree. But again, many people are looking at that. So let's look at tonight's how Jerome Powell speak before we get this, because I may be wrong too, yeah? Now, Mike Wilson is one of the bear in the market itself. He still thinks that the market is going to go down. He believes that the earnings are going to be down, so he thinks that the market will be down, yeah? So the stock market itself just did some sell-off first initially because the yield, but when the yield came off, right, it recovered. So there's an 80% chance of the yield the interest rate going up itself because of the CME, their own group. They have this so-called status and review. So that is something to watch out for. Would that be 3 to 4 rate hike? I don't think so. 1 or 2 maximum, yeah. Now, basically, you can see that we have a lot of problems actually from Nasdaq, and I told you Nasdaq is a short candidate whenever you have it at a high level. Now it's a low level, you wait for a while, okay? Now, Nasdaq actually dipped around 10% from its all-time high before curtailing up to end is at 5%. So let's just look at what's the reason, because now you can see that the 15,000 level is very, very dangerous. The last time when we see break 15,000, it went higher because that was how it works, okay? Then after that, when it came back down itself, he said that he don't want to be, that basically itself, when it came back down, you can see that it stopped there. And then when it go back up again, this become a resistance, but once it clear, it will be right up again. So where we are now, we're at the same place, okay? And I'm looking at him to bring me up to the next level because basically, why not, right? We can see whether the market can go up higher. But of course, if the market cannot do that, then the selling could be terrible. So they are saying that usually they use the 5, 10, 15. So what we use the same thing, right? We use this for our ATH itself, use the 5, 10, 15, 20 numbering off to get a rough feel of the market. Yeah. Okay, so now Jim Cramer, as usual, that's why I say don't put me and Jim Cramer side by side each other because we are totally different level. Let me explain to you why. Now, Jim Cramer says that the market is treacherous right now and need more stabilization in the tech. He finds this market very dangerous. Now, one thing very important, let's take a look, yeah? Jim Cramer says that Monday, the carnage in the Nasdaq stock is not being reversed as much as the weighted of the Dow Jones. Now, in fact, itself, you remember, he was the one to tell us and say that the market will recover, but now he changed his words, right? So don't you feel that this is how it works in the market? And of course, do note the Dow is solely measured by the average price of the 30 component stocks. And of course, the four major companies are Goldman Sachs, JP Morgan, Chase, Travelers, and American Express. Okay, so all these are the ones that lead the Dow, and all the FANGs lead the S&P and the Nasdaq. Yeah. Okay, so now this is where I get a pen and paper ready, guys. This is very important because this is where I get some technical drawing. Now we know the low of the day. The low of the day is 35,639. Okay. Now you notice that the market opened straight away, came down all the way, and then hit the very important technical point at about 35,648. So of course, to try it out, right, I'll tell you this. The closing price itself, as you can see on our screen, is 36,068. Okay. So let's say now we do a hypothesis. If the market can come down this magnitude and come back up the same magnitude, would it have the strength to go up to the next same magnitude itself? Well, to me, it's very, very possible. To me, it's very possible. So let's do the math, shall we? We take the closing, which is 36,0688, and the low, which is 35,639. You take this plus together and then divide by 2. What number do you get? All right, what number do you get? Let's take a look right now, everybody. Okay, so 36,068 minus 35,639, that will be the closing to the tail. Then, okay, where they then divide by 2, take this number, you get 2, what do you get? You get something here, right? Anyone can tell me what's the answer? First of all, what's the distance between here itself? Let me just do for you guys since I don't get anybody coming in yet. Okay, so the closing price is 36,068. Then the low of the day is 35,640. 639. The difference is about 429 points. Okay, 429 points. Okay, so now take a pen and paper, write down something very important. Now, if the market is to go up instead, it will go up the same magnitude of the entire tail. So which means that you take 429 plus back 36,068, you get one figure, and the figure is 36,497. That means that I'm looking at the Dow Jones to go up, to go back to 36,497 if the market is to recover. Okay, is to recover, only if. Now, take again the same thing again, the 36,068 to the low, which is 35,639. So the closing, these two add together, then divide by 2. What would that be? So let's try it out now. 36,068 plus 35,639. Divide by 2. Okay, divide by 2. You get a figure. That figure, which is the midpoint of this, is 35,853. Okay, so what I'm trying to explain to you is this. Okay, the closing to the low of it, the middle part is called the technical point, and 35,853. The market cannot break below. The Dow can come down and touch this 35,853 a short while, but it has to stay up. Because this is not a long tail itself, right? It's a very interesting technical point. Okay, it's a very interesting technical point. The last time when you have this itself, I can't remember. Okay, I can't remember which day is that, but anyway, this is the point. So as long as the market stays above 35,853, the market will go higher. If the market touch this number and go up, it's a buy also. Now, that means that if the market loses 35,853, I'm so sorry, but it's going to go down again. Okay, so 35,853 is a very important technical point. Yeah, write it down. For this is spot market. Okay, 35,853. As long as the Dow stays above it, the market will go up. The target itself will be 36,497. Okay. All right. So that is the very important first technical point I'll show to you. Now, of course, you can see that Jim Cramer earlier says that the carnage in the technical stock is not reflected as much as the price-weighted Dow Jones. Okay. But if you look carefully itself, right, you can see on my chart itself here. This shows that the Nasdaq and the Dow has been going together, but it was actually the Dow Jones that actually came off recently in the late November, and while the Nasdaq was going up. Then after that, only recently is that the Nasdaq has come off quite a fair bit to come very close by to the Dow. So actually, whatever Jim Cramer said wasn't very true. But again, I say if you look at 2022. Then he's technically correct lah. Okay, but my point is this. This actually tells me that the market itself is coming together, and a bigger movement should be on the way coming soon. That is how I see from the chart view itself. Yeah. So this Evercore Avenue says that right, the S&P 500. It's going to reach 5,100, the same level that Tom Lee gave for 2022. And he said that investors should be going for value stocks. So he did their price model shows that, right, year on year is consistent with the multiple year contraction in year 2 after a bear market trough. Where's the trough? Where's the bear market? Okay. The average bull of the past century is for the last 51 months, rising by 154%. The monthly gain for this bull is one of the strongest. Liquidity and growth is the highest. So in short itself, right, he's saying that the bull market will continue to go up to 5,567.32 until 2024. Wow. Okay, so he predicted such a huge figure. You might as well just all in and buy and become the richest person on earth, right? This is how I always see this way. Okay, now this is where I get pretty upset. Okay. While his target is 5,100, which is pretty fair, he is saying that the upside risk for the S&P bubbling up is 5,509, or tipping to 3,575 if the pandemic is prolonged or the economy struggle with the post-stimulus debt hangover. Wow, my God, he's giving a 500 points upside, 700 points upside target, and a almost 1,002 downside. Okay. Oh gosh, that means that he's very protected, right? No matter where the market go the next few months, I think he will sure be correct. Oh my God. Okay, anyway, he said that if everything goes right, he says that, right, meme stock will recover, cannabis stock will recover, alternative market should go up, call option go up, everybody's buying. And he felt that this is going to be the same thing that will happen probably here in 2000. To him himself, this is like a Superman cape. All right, whereby he felt that, right, the market can really fly all the way up south. Now, JB Diamond says that the best economic growth in decade now. Okay, says that this is the best growth, and he says that, right, because now the underlying looks good, the stock market is good, everything is good, the balance sheet is good, and say that now even obviously the bank shares are better because it's up at 10% due to the yield. So in short, he feel that everything is good. There's no need to worry. Now, I kind of realized that, okay, if you can recall back, everybody, recall back about 2 weeks, 3 weeks ago, they were all calling for buy, and the Dow actually and the Nasdaq peel off immediately. Correct? Yeah, so now the market came off itself, they're calling for buy, and they are very confident that it will be a $5,000 point S&P by this year itself. So the question is if that's the case, then why are they selling? Is it because they sold early and then now they're buying back to buy up again? Or they already know something is wrong, they sold it off early, and then now this buyback itself is just going to be intermittent. So JP Morgan, Kolanovic also came in and said that this is the best time to buy in the market. Now, Marco, this guy is right. He is one of the highly sought after strategists. Who is he? He's one of the few guys who predicted the March 2020 bottom. And then now recently he's been promoted to global chief market strategist for the bank. So now he's a doctorate in theoretical physics, and he's famous for using alternate and quantitative data to predict stock market up and down. Something similar, yeah? So in short itself, right, he feels that, right, the Omicron, the lower severity and the high transmissivity is going to phase off soon. And Tom Lee also, he says that, right, once the market peak in terms of the transmission, within 3 months' time, the stock market will also peak, or at least will go up, right? So that's the reason why he felt that the market is still very ripe for the upside, yeah? All right, so Santoli, the market correspondent, says that, right, the recent tech sell-off accelerates on the big momentum or the big purge. So basically, the 200-day MA is the first thing that they're watching at. Now, let me just show you the 200-day MA. Just give me a short moment. Okay, I put in Nasdaq right now. Okay, so you look at it off. This is the low, right? This is the low of the Nasdaq. So if we're going to insert a indicator like moving average, something wrong for now. Okay, have you already? Right? After that, I change it to parameter. The 200, and then source is close, and wait. Oh, wait, I change to the symbol, yeah. For 1 minute, let me just get it done proper. I think it's wrong. It's MA. It's many. Okay, simple moving averages. Wow, so many. Oh gosh. Okay, never mind. Let's take all the way. Sorry, guys. Okay, never mind. I tell you what, I used the other one. It's here for me. Oh, yeah. So sorry for that. I used our. This is better. Okay. Okay. So sorry for that. To hold you back. Hold on. Let me just show to you what I'm trying to explain to you. Okay. Here we go. Okay, so this is the Dow Jones. Now we're going to put in the insert indicator. Then we put the moving averages in. The one that the market is using right now is the 200-day moving average, but they're not using linear weighted. They are using the simple. Okay, the simple one, close, and then go. You can see that this is the Dow Jones, right? And you can see why it's so perfect itself. So you look at the Nasdaq. We are pretty nearby here itself, right? You can see the Nasdaq coming down. So that's a 200-day moving average. So, but I think because this is CFD, the data is not total, so that's why you cannot see the touching point. But again, my point is this: sorry to have this thing disrupted. You can see from here itself. Okay, sorry. Over here is that they are saying that it has hit the 200-day moving average for the Nasdaq. But actually, if you look at it, if I use the same one, I think I saw mine, our moving average, we changes to this linear weighted. Linear weighted, you can see that better. Yeah, this is what I meant. Yeah, can you see that? It touches it and then rebounded. So that is how it looks like. And look at the Dow Jones. If you put the Dow Jones in the picture, okay, the Dow Jones one haven't hit yet, so that's why there's a lot of room to go. So no need to worry about panic that the market's going to come off. Okay, so sorry for all the misplace of charts, but my point is this: the market has a very interesting rule. Let's take a look at. An old Wall Street rule of thumb is that if the December low is broken early in the new year, the odds of a more taperish tape rises. So it's the S&P 500 that I'm looking at. So let's look at the chart again, and you can see the concerning factor now. Now the S&P, right, the rule says, right, the rule of thumb, that's earlier again, and let me just confirm again the rule of thumb. Okay, if the December low is broken, December low, right? So where is the December low? Let's take a look. December low for this year, as you can see, will be here. Correct. This is December low. Now, December low itself is at about 45.31 level, 45.31, which is here. So if the market do actually really take that so-called rule of thumb as example, that means that if the market ever break this point, 45.32, if you ever break this point, the market will really, really sell. Okay, so the market basically rebounded, and again, beautifully, it touches my technical point and rebounded. And that's also another reason why I told you guys on the group chat to buy back your short position, because this has been very, very accurate. So, which means that if it's so deadly accurate, where could it be going? Well, somewhere down here. So, which means that now I can tell you, if things were to go into placing, it will go to 4,700 first. To be precise, is 47.04, around there. Can you see that? Now, 47.04 will be the first target. So now it closed at 46.70. That means that there should be another 30 points upside to go. Now, 30 points upside to go, loosely translated, is about another 250 points for the Dow to go higher. Yeah, around there, 250 points. But it's cash market, yeah? Now, if the market do pull back for whatever reason, then 4,600 is the next technical point to watch out for. That means that the market cannot lose 4,600, yeah? The low was 45.82 yesterday. So next wave, 4,600 cannot lose it, because if you lose it itself, it may be treacherous to go down enough to touch this point here at 45.32. And if the market loses 45.32, then it should be able to come down all the way, and that's a scary part at 43.20. Yeah. So guys, take a screenshot of this. For this is a cash market. Take a screenshot of this and put it in, because that will give you an idea of where the market could be going in the next few days. Yeah, the next few days. Yeah, as I'm saying. Okay, Ken. All right, got it. Okay, very, very important. Okay, so that is my view on the S&P using some technical lines to show it to you. So with all that itself clear and understand, let's take a look at this one here itself. This is the sentiment indicator, and this sentiment indicator tells you that the market now is very light in position, meaning many people are not buying. And of course, if the market is no one buying, then isn't that a good time to buy? You see. So for today itself, right, why am I bullish? Because I'm just basically taking a technical point of view. I believe that the market itself, right, most likely might be going higher. Okay, the market most likely might be going higher. Okay, so all clear on that? Okay. My view, K will be long first. Yeah, long first, then look at the 4,700. Only if it taper off and come down, then we short. Okay, but not but now it's long first. Yeah, so clear? Okay, got it. Because now you can see that the fear and greed index itself is 49. So 49 is nowhere near anywhere that I usually use. I use below 24, below 25 and above 84. Remember the figure that I always use? 25 and below, I will look at it. 84 and above, I look at it. In between, we don't do much. I think just follow through, yeah? Okay, so yesterday was 53. But because of the strong recovery, it's only 49. But you can remember this 1 month ago, it was 38. Yeah, so that was how it goes. All right, in terms of chart pattern itself, right, I don't see anything to be concerned for. So only if, let's say, this indicator spike up again to around here or 80 level, then it'll be a very good time to take a short position. So which means that at the moment now to buy is better deal. Okay, now to buy is a better deal. Yeah. All right. So once again, please take pen and paper ready for this part itself. I'm going to show you some very important stuff. Okay. Now yesterday is all right. Some of you got a bit confused of what I try to say about this particular Federal Reserve Bank numbers. So I'm going to do this again. Now every month itself, as you know, the U.S. Federal Reserve is actually putting money into the bond market. So the amount itself at the moment is $80 billion. That was last 2 months ago, right? Every month put 80 billion. At one stage itself was 120 billion. Then after that itself, right? They say they'll reduce it from 90 billion, 80 billion, drop down to 60 billion. Now what happened was that in December and January, you can see that, right? Okay, that in November to December, sorry, that they actually reduced further by $10 billion because of the tapering started. So by reduced by 10 billion. And very important, if you take a look itself, the dates, and I can see that the dates are given here itself. It's like this is like December the 14th, November 15, October 15, September 15. Can you get it? Okay. Oops, sorry. Okay, got the idea? Yep. So that means that around 15 of the month or so, that is where they will likely to be purchasing the bond. So now everybody take a look. Okay, take a look. Yeah. Let me just clear all this away. And we put in the Dow Jones. Okay, follow me, everybody. So if I'm going to put a line and a linear line over there itself, horizontal line, vertical line. Okay. So where's 15 of this? The last 15 of December was here, right? Can you see? This is 15 December. Look at the color. What color do you see on the chart? Then after that, you look at the next midpoint, which is 15 November, right? Now 15 November is here. Take a look and click. Can you see that? Then after that, we have the next one. It will be somewhere around here, 14 or 15 November, October. Click. Now, guys, what do you see? You can see very clearly that usually the time when the Federal Reserve is putting money into the system, the market in general is up for that few days. But if the market after they injected fail to hold, that's where the selling is. Fail to hold, selling is. So now you understand what am I trying to explain to you. So guys, again, I repeat this. This is going to be an interesting thingy. When the day comes when they're supposed to inject the funds, the market in general is up. Okay? And then the low of that day is going to be an important technical point. If the market stays above it, the market go up further. If the market goes below it, the market sells. Can you see that? Okay, got the idea. So now when is 15? Okay, so 15 November, January, when is that? That will be on a Saturday. So that means that likely they'll put in the money on the 14th of January. 14th of January. 14, yeah, likely, yeah. I'm not saying 100%, I'm not Federal Reserve. So 14 January is where the day they will put in the money. So if let's say, if you ask yourself a question, If I know that there'll be some money coming in on the 14th January, okay, I know that this will move the market higher. What will I do before that itself? What will I do before that? And what will I do once I've done it? And what will I do the next few days? Can understand where I'm coming from. So if you understand what I just shared with you guys, please key number 1 right now. If you understand what I just say, please key number 1 right now. Now, of course, is this going to be like a sure thing itself? No, please. Nothing in the world is sure, okay? Everything itself got its own limitation. Sometimes itself can be totally different. So do not think that everything is so simple. Maybe the market itself is not able to go higher. All these things are possible, yeah? Okay, let me see how many of you are still around listening to me. Okay, got it. Wow, okay, quite a few of you are still around. Okay, cool. All right, so you got an idea? Okay, that's the reason why I want to do this a bit more specific today. Okay, so Nasdaq chart sends a warning signal, but this analyst see opportunity in the breakdown. Basically, in short, the stuff right, they're using this 200-day MA to draw it, okay, on the Nasdaq. They did not use whichever, I suspect it's with simple, or maybe they adjust a little bit. But whatever it is, they're trying to tell you that the Nasdaq did come down to the MA and then rebounded over there. But if you look at it for the Nasdaq 100, now Nasdaq 100 is the 100 largest non-financial stock. That means tech stocks only, and it did not cross the 200 MA. That means that the bigger one are still not near a concern, but the smaller one are concerned. So whatever it is, the key point is they are using this very strongly. So I want to tell you very important things to take note. Yeah, please write it down somewhere. When a market use a technical point very, very closely, which means that example like this, very closely, and form a support, it will be a support. It will be a support. But the moment it loses it itself, right, then the support will kill the market. So what I'm trying to say is this: if you recall, if you can remember, back then itself, right, in 2020, before the pandemic really hits the world, the moving average on the Nasdaq and Dow was perfect. Okay, let me just bring it to you now live, and you can see for yourself on the scary part of this. Okay, let me explain this to you. So of course I will use back the one that I used, linear weighted closing. Yeah. Okay. Now watch this, guys. If I move back to where the pandemic time is, you can see over here. Okay, so what I can explain to you is that the market was using this very nicely, and every time it hits this point, it rebound, hit this point, it rebound, right? Can you see that? So this is actually a very good example to tell you that how important is this technical point. But once the market, you see, touches this, you can see on this particular day, the market touches it itself and stop there. But the next day, the market actually closed below. Let me just push the chart a bit to the right side now. You're being blocked by my face. Sorry about that. Let me get bigger. Can you see right now? Okay, so you can see on the screen that when the market comes down, it stopped nicely exactly at the MA. But once it loses this itself, right, the market, wow, went to crazy spiral selling. Okay, so you get an idea. So now this 200-day MA seemingly is a very closely watched figure by a lot of analysts. So for the Nasdaq now, you can see it. Put the Nasdaq in. After that, I put the MA again. Let's just see if you get the MA correctly this time around. I try to figure out what number they are using. So maybe they use the HLC4. Almost there. Okay, let's try trial and error. Yeah. Oh, still not there yet. It's not moving. I'll move very slow. Wait, I'm trying to get the one they are using. Nothing changed. How come like that? Okay, sorry for this. I didn't prepare this part here. I thought that should be quite simple, but it doesn't seem to be reflecting how it should be. Okay, never mind. All right, something wrong with that. I can get you the right one. Something is wrong over here itself. Oh, yeah. Okay, never mind. Okay, so I think there's one more here. This is a technical point. Yeah. Okay. Anyway, like I say, guys, sorry for this once again. Basically, you are seeing that you can see that they are using this very closely knitted. So what I'm trying to say is this is actually not a good sign. To make it simple for you guys to understand, this is not a good sign. Because when the market is actually following trend, it will not touch the line. It will not touch. It means that if the market is trending, the market will be away from the MA. Away. So when it starts to come down and consolidate, right, that means that the strength is actually weakening. So of course, the market at the first junction will bounce. It will bounce. But once it fails and come back down, the selling will be atrocious. So please understand this is all right. I already tell you my view for February. I'm very concerned. And I believe that this time round, this time recovery is the dead cat rebound, in my opinion. So this dead cat rebound will rebound under how high, how much, I don't know. But it is just a very simple logic here itself. If you could ask me my personal view on this, okay, write it down somewhere if you need to do that. Okay, so you look at it now from the technical point of view. Let me just clear all these things away. Okay, let's look at it from the technical point of view. Okay, so I told you today will be technical, a bit more technical, yeah. So if I put a trend line, this is the highest point. I put a connection it. This is the how it looks like, right? Okay, if I squeeze it in a bit more, this is much more accurate, right? Can you see now? Yeah, that's the reason why I called for sell recently on the Nasdaq. Okay, so we have that as a form of the guidance of the resistance. Then after that, let's start with the next one, which is the support level. So now you can see the support level is interesting. Wait, hold on here. Okay, look at it. This is a very nice channeling. If I connect all the dots together, can you see that? Yeah, can you see now? Can you see the thing is beautiful, right? Now look at it carefully again. This is exactly what the boys want you to take a look. This is where it stops and rebounded, stops, rebounded, stop, rebounded, stop, rebounded, stop, rebounded. So almost in a way, it should be able to come to the new high, and that's what the market is saying. All right, that is what the market is saying. Okay, so that's why the market rebounded yesterday. So it was not by coincidence, it was expected. Now, if I look at it in a very different angle, now everybody watch this. Assume that, let's say, I don't think that this market will rebound. Assume that I don't think the market will go to a new all-time high. Assume that taking the devil advocate, I will take the highest point, which is here, not this guy. I'll take this point, highest point, and drag a Fibo down. Now, what do you see, guys? This is where the concerning factor comes in really. Okay, so write it down somewhere on a piece of paper if you need to, or take a picture if you want to. All right. To me itself, this is going to rebound because it has already rebounded. The 61 point, the 50% first. Okay, the 50% will be here, and that's quite comfortable. And this figure is 15,884. That is the 50% market. Now the 61.8 is 16,054. This is the 61.8. Now where we are right now is 15,614. Okay, so if you'd ask me itself, right, in terms of technicality, This is the two number that the Nasdaq may go. But if the Nasdaq is this rebound to be purely dead cat, then 15,714 will be a very critical level. You notice that all end at 14, all end at 4, very scary. Okay, don't you realize that, right? If the market is a rebound, right, it won't be much. That means that the next rebound it will go out will be the 38.2. That's very 714. Only if it breaks 714, then it'll be 884. Then after 884 will be 054. All the fours. Okay, all right. So you got the idea? So this is where I suspect it may happen. So these few numbers, please kindly take note, because I feel that, right, the Nasdaq itself won't be able to cross 884. Yeah, I don't think so, because this selling itself came together with the yield. I don't think so this time around the market will be able to hold. But the market to rebound to 884 is very possible. Let me explain to you why. Because you take the high and the low of the entire range yesterday. The high and low of yesterday's range, let me take a look. The high itself is 15627. The low is 15165. So the entire range yesterday was 462 points. So you take 462 points plus back the high of yesterday, which is 15,627. You get a number, and the number itself, interestingly, is actually, okay, give a wild guess, but it is like that. The entire range itself is 467, and if you take this entire range and multiply by, and you take the whole range and plus back the high itself will tell you it should be 16,089, which actually coincide with this 61.8. Can you see my point? So that means that if the Nasdaq is to be pumped up because maybe the earnings are fantastic or whatever, there is a chance for the Nasdaq to go all the way up to 16,000 level. But once it touches there itself, right, which is 61.8, I cannot believe that the market will pull back. I cannot believe that the market will pull back. And if the market actually pull back itself, right, this is going to be quite crazy because everybody expects the market to go a new high. But if it doesn't happen itself, right, the selling wave can be quite atrocious, yeah? So that's the reason why I feel that the market itself, right, be very careful. This time around itself, right, this rebound may actually be a stunner that will create the the bull trap. And of course, that's why this, you can see this Tom Lee and friends, okay, are all basically calling for the sell in the market in February. So you understand where I'm coming from, guys? This is very important. So if all clear, press number 2. Okay, yeah. Sorry today it dragged a bit longer, but I told you today it's a very technical point, technical day charting, so you need to bear with me. Yeah. Okay, settle, done. That is the point of today's this part itself. Okay. All right. So with that itself, right, let's go to the chart they've been waiting for. I'm so sorry to hold you back. Let's go to the charts. Okay. Now, China market has been sideways for the 3rd day in a row, and obviously the 2nd doji in a row. So what are we looking at? Big movement, and I suspect itself, right, it's actually today or tomorrow, because why? Federal Reserve is going to talk, right? So likely this will happen. So again, for China market, for the last 2 days, it's already been sideways. That means that just wait for a while. The big movement come, just go for the kill, yeah? The Dow Jones itself, right? We can see this morning, we have a lot of green dots at the chart view. That means that there should be bigger movement very soon. You can see that, yes, with many green dots here. So either we're going to have a big upside later or a big downside later. So traders, be careful. Upside itself is 36,200. Downside itself is 35,930. Okay, so traders now seemingly is gearing downwards, but the KSI tell me is green. So be careful. The market, this one is a short-term wave movement. The bigger one is all right. You can see that the market has been down for several days, but beautifully it hit the KSI green. It stopped there. And of course, when it stopped there itself, it hit the BNB minus 1x1 and stopped there. This is a very strong move up. So the MLP itself today will be the key highlight, 36,151. If the market hit MLP M151 and stay up, it will go higher to maybe 36,300 series. But if we hit MLP and pull back, right, suggestion, take some profit first. Now, MA is 36,083. That's why the today market stopped there just now. Yeah, all the multiple green dots is because it hit the MA and stopped there. Okay, so that is the Dow Jones. The Nasdaq, let's take a look here itself. Now, Nasdaq itself, right, is strong and weak at the same time. Now, Nasdaq, the tail is very long. It's very, very long. It had came down and hit the MA 200. As you can see, it triggered it and rebounded. But the KSI maintained red in color and quite deep red. So that means the downside is still there. Now, the 15,615 is actually a very important MLP, which the market tried to cross above it. Only if it crosses, because today is a doji directional day. If it stays below OP, it's a sell. It can come back down to here. But if you can stay above OP, the upside itself should be able to bring it back to 15,850 range. Okay, so traders, watch out for that. Okay, so that is the Nasdaq. Now, S&P 500 is also a very, very long tail. You can see the tail is so long. Okay, and the KSI is still red in color. So it's a doji directional day. It was a doji day. So if the market stays above MLP, then it will go up to 4713. But you can see that, right, the market now is not comfortable to move at all. So it's now ranging at the page level and it's staying below the MLP. Yeah. So the downside itself is 4653 because that is the KCV that actually happened from yesterday. Okay, so that is the S&P for Hang Seng. Now, Hang Seng continued to buoyant to upside. Now, Hong Kong is up despite China is flat. So that's why if China goes up, Hong Kong will shoot up. So my view on Hang Seng is still the same. I'm looking at this figure, 24,098 this week. I repeat, this week, yeah? So, of course, today is a doji directional day again. So, likely above OP is a buy. Now, very important is the MLP. The MLP is 23,527. The market touches MLP earlier and then bounce up already. Because why? The KSI is so green and it's uptick itself. So that's the reason why today we are a buyer in the Hang Seng, even though it opened below P2. Yeah. Okay. So 24,098. You can consider to take some profit around there. Okay. Nikkei. Nikkei is sideways today. It has already sideways for quite a while, but it nicely hit the chocolate bar at 28,061 and then rebounded a little bit. MLP is 28,270. We are loaded slightly lower. Only if it close 270, then it can go to 689 level. Yeah, by the moment now, it's still too far away. So that's the reason why I believe that the boys are doing a lot of manipulation at the back. Now, Dex itself have came down. I told you Dex will come down, and Dex came all the way down to 15,785. It really came down according to plan. So for those who have followed through, congratulations, you made money on Dex. Yeah. So for today, Dex itself, right, I suspect that there will be a rebound, and this rebound should bring the market back up again. So basically, watch out for 15,999. Yeah, it's MLP level. Okay, so that is Dex. Crude oil. Now, crude oil have been stabilizing, nothing movement yet around the 78 to 80 range. So nothing much for me. BNB also given. KCB, there's so many of them, all waiting for you to strong movement. So all I can say is this: there's no much view on crude oil today. The downside itself at best will be the MA30, which is the 74.90. Upside at best itself, right, maybe $80 because that will be a good level to watch out for. Yeah, that is the best level to watch out for. Okay, so what we have now is, let's look at the gold market now. Gold today is now basically resisted at the pivot 1, 1806 level. It's a pivot 1 level. KSI is red, so if the market hit pivot 1 and couldn't go up, it's actually a sell. But because it's above OP, right, it's a bit dangerous. Now, today, the low itself, right, is 1800, and the MA30 is also 1800. So this is supported by the MA, supported by the MLP, supported by the MA200. So that's the reason why overall is bullish for gold, even though there's no color change yet. All right, so if gold can stay above 1806, then the first target it should be going will be the midpoint, and that midpoint itself should be somewhere around 1831 level. Okay, 1831, yeah. So take note of that. Now for silver. Now silver has lifted itself beautifully yesterday. Silver, 2 days ago, it came down. Silver touches the minus 1x1 and recover from there, right? So exactly what we predicted, recover. But the KSI and the BNB are all negative at the moment now, so the upside will be limited. I suspect the limit between $2.62. That's the MA30. It should be resisted there this week, so unless it's a breakout, yeah. Okay, last two is the Bitcoin and Ethereum. Now Ethereum is sideways today. Ethereum is hanging at my pivot 1 today at 3,060. So it's hanging around there. Now I suspect that the Ethereum is going to go up soon. If we break MLP at 3130, it should be able to go back to 3600 level. Yeah. So Ethereum, watch out for that. And last one will be the Bitcoin. Now Bitcoin has went down yesterday to below 40,000. And I'm going to be charged with a lot of stuff here itself. But for buying here today, 41.995 is actually the midpoint of the cage, of the MLP. So if it stays above that itself, right, it should be aiming at the 42,733 level. Yeah, I think we are pretty nearby. $400+ to go to pivot 1. If it stays up itself, who knows? Bitcoin may just recover a little bit. But at the moment now, right, Bitcoin is not in favor, so just go slow with that. Okay, all right, so that will be all for today. Thank you guys for waiting for me. Probably the delay a bit longer than usual. But today, in summary, I'm bullish the market. But of course, it's big cap rebound. It will not sustain, in my opinion. So you don't need to jump in too big. You just have to follow through and buy according to plan. Yeah, that will be all today. Now, later on itself at 3 p.m., we will have our revision. So I'll see you guys later on. This is Cal signing off. Bye-bye.